The reset ends. And on that morning, most people open their phones, stare at their accounts, and feel completely paralyzed. But a small group of people, they are already 3 moves ahead because they didn't just survive the 2026 reset. They designed for the day after it. And today, right now, I'm handing you their exact rebuild map. Welcome back to WealthForge. We don't follow the market. We design the moat. In a world full of followers, people reacting, panicking, chasing yesterday's headlines, we are the architects of our own freedom. If you're new here, understand something. This channel does not give you financial advice. We give you a structural blueprint for a specific future. The shift from being a follower of the old system to being the architect of a new one. And right now, with everything reshaping itself in 2026, the most valuable thing I can put in your hands is not a stock tip. It's not a hedge call. It's not an opinion. It's the rebuild playbook. The exact map the 1% are already running before most people even realize the reset chapter is closing. Here is what we are covering today. First, the reset endgame scenarios nobody in mainstream finance is actually explaining. What does the morning after really look like? Second, the 4 moves the wealthiest 1% are executing right now behind closed doors while the rest of the world is still watching the damage reports. And third, your complete 30-day rebuild checklist, week by week, day by day, sequenced exactly the way an architect would sequence it. Stay until that third section because that is where your blueprint gets personal. Let's build. Let me ask you a question most financial creators are too uncomfortable to answer clearly. What does a reset look like when it ends? Not during the chaos, not inside the fear, the after. Because here's the truth nobody tells you. Resets don't announce their ending. There is no official bell, no government press conference that says, "Congratulations, it's over, here's your next step." What actually happens is quieter and far more dangerous for the unprepared. The first scenario, the liquidity illusion. Markets begin recovering, numbers flash green, relief floods in, and the majority of people, exhausted from months of uncertainty, do exactly what feels natural. They move back into familiar positions. They reload what they lost. They buy what they used to own. And here's the structural problem with that. The asset classes that built wealth in the decade before the reset are not the same ones that will build wealth in the decade after it. The reset is not just a market correction, it is a regime change. The rules of the game were quietly rewritten while everyone was watching the scoreboard. The second scenario, the capital rotation nobody explains. While retail investors are rebuilding their old portfolios, 1% capital is moving fast, but it is moving into an entirely different map. Hard assets, productive infrastructure, geographically diversified cash flows, systems that generate yield without depending on the monetary architecture that just cracked. This rotation is not secret. It is visible in the data, if you know what data to read. Most people are not reading it because mainstream financial media is still covering the drama of the reset itself, not what is being built inside the architecture of what comes next. The third scenario, the credibility vacuum. After every major financial reset in modern history, 1929, 1973, 2008, there's a window where the institutions, advisors, and systems people trusted before the reset lose their authority fast. And in that window, a new class of trusted voices, frameworks, and wealth structures rises to fill the space. That window is open right now, for you, for anyone who arrives with clarity, structure, and a genuine blueprint at the exact moment people are starving for a new framework. 3 scenarios, 3 categories of opportunity. Each one depends entirely on whether you understand what is actually happening or whether you are still watching the damage report. Now, let's talk about who is already moving. I want you to reset one assumption before we go further. The 1% are not smarter than you. I mean that genuinely. What separates them is not intelligence. It is a different relationship with time. When most people are reacting to the present moment, the 1% are already executing against a future they have decided is coming. That is the structural gap. And here is exactly what it looks like in real moves right now. Move 1. Liquidity staging. Before the recovery narrative is confirmed, before the headlines celebrate the bull market, the wealthiest players are staging liquidity. That means deliberately holding cash and near-cash assets in a ready-to-deploy position, waiting for the specific price window that only opens briefly after a reset, when fear sellers are still clearing the market. Not gambling, not speculating, staging. They have already identified the categories. They have sized their positions in advance. They have written their entry criteria, and they are simply waiting with precision. You don't need $1 billion to do this. You need a number, a target category, and the discipline to hold until the window opens. Move 2. Jurisdiction diversification. One of the most consistent behaviors of ultra-high net worth individuals after a systemic reset. They split their financial exposure across jurisdictions, multiple currencies, multiple banking systems, multiple legal frameworks. Why? Because every reset produces a government response, a monetary response, a regulatory response. And the people with all their assets inside one system, one country, one currency, are the most exposed to whatever that response looks like. This is not about moving money offshore illegally. It is about understanding that financial architecture is geographical and building your map accordingly, deliberately, and in advance. Move 3. Owning the infrastructure of the new economy. Every major reset reshuffles which industries and asset classes become dominant in the decade that follows. Post-2008, it was information technology and digital leverage. Post-2026, smart capital is already moving toward productive physical assets, energy infrastructure, and systems that generate real-world value independent of financial engineering. The 1% are not buying what was valuable. They are buying what will be necessary. Sit with that distinction for a moment. Valuable versus necessary. If you internalize that framework, it changes every capital allocation decision you make from this point forward. Move 4. Building asymmetric income systems. One of the most consistent post-reset behaviors across multiple economic cycles, a deliberate shift away from linear income to asymmetric income structures. Royalties, licensing, systems that produce cash flow without requiring your active time for every dollar earned, positions that work while you sleep. The reset makes this shift urgent because the fragility of linear income, trading time for money, has just been demonstrated in real time in everyone's own accounts. The 1% have built these structures for decades. The window post-reset is when the rest of the world finally becomes willing to build them too. 4 moves. Each one is a lever, not a trend to chase, a structural lever to pull. Now, here is where the blueprint gets concrete. This section I want you to save, screenshot it, clip it, write it down. Because this is not general advice, this is a sequenced blueprint. And sequence is everything. You do not lay the foundation after the walls are already standing. Here is your 30-day rebuild sequence, built around the same principles the 1% are executing right now. Week 1. Structural clarity, days 1 through 7. Before a single investment decision, you do a full site survey. Days 2 and 3. Map your complete financial exposure. Every account, every asset class, every liability, every obligation. Not to panic, to see clearly. Architects do not build on land they have not surveyed. Days 3 and 4. Identify your 3 most fragile positions. What is most exposed right now? Currency concentration? Regulatory risk? Linear income dependency? Name them. Write them down. You cannot redesign what you refuse to see. Day 5. Run a liquidity stress test. If asset values repriced 40% lower tomorrow, what happens to your monthly cash flow, your obligations, your ability to stay in the game? This is not fear. This is structural clarity. Days 6 and 7. Define your rebuild objective with precision. Not build wealth, a structural statement. Something like, in 12 months, I will have 3 income streams, one of which requires 0 active hours from me. Specificity is the line between a wish and a blueprint. Week 2. Capital positioning. Days 8 through 14. This week is about getting your capital staged before the mainstream recovery locks prices upward. Days 8 and 9. Determine your liquidity threshold. What percentage of your investable capital should be staged and ready to move? For most people in rebuild mode, 20 to 30% is the structural target. Personal income, obligations, and risk profile will shape your exact number. Days 10 and 11. Identify your first target category. Using the necessary versus valuable framework, which asset class aligns with post-reset economic reconstruction? Do not chase consensus. Study which industries become structurally load-bearing in the economy being rebuilt. Days 12 and 13. Write your entry criteria. What price level, valuation signal, or market condition tells you the window has opened? Write this before the moment arrives, because when prices are moving and noise is loud, the only protection against reactive decisions is a pre-written entry document you wrote in clarity. Day 14. Full review. Sharpen everything from the first 2 weeks. Week 2 ends with you clear, staged, criteria written, and waiting with precision. Week 3. Income architecture. Days 15 to 21. This week, you build the asymmetric income layer. Days 15 and 16. Audit your income structure completely. How many streams exist? How many stop the moment you stop working? The reset has already shown you the fragility. Use that clarity as fuel, not as fear. Days 17 and 18. Identify one asymmetric income vehicle to build or acquire. A digital product, a licensing structure, a rental income unit, a dividend position, a business system with repeatable cash flow. The category matters less than the structure. Does it generate income without your active time attached to every dollar? Day 19. Design a 90-day build timeline. What happens in the first 30 days of building this vehicle? The next 30? The final 30? This is your income architecture blueprint, sequential, specific, and written. Read it every morning of month 2. That's the blueprint. 30 days, fully sequenced. Here's what I want to leave you with. The 2026 reset will end. And when that day arrives, the next decade will be built by 2 groups of people. Group 1, the ones who were still recovering when the window opened. Group 2, the architects, who had already designed for the day after. You just watched this entire video. That's not nothing. Most people consuming financial content right now are looking for comfort, for reassurance, for someone to tell them it will be okay. You just built a 30-day structural blueprint for the decade ahead. That's a different posture entirely. At WealthForge, we don't follow the market, we design the moat. We don't wait for permission from the system that failed us. We don't ask the old architecture for guidance on building the new one. We show up with clarity, with structure, with a blueprint already in hand. Do one thing right now. Save this video. Not for today's version of you, for the version of you 90 days from now, who needs to be reminded you had the map before everyone else did.
and subscribe to WealthForge, because next week we're going into the specific asset categories the 1% are staging into right now, with the actual data behind each move. We are not followers. We are architects. Let's build.